The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the January 29th, the wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. And let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know that I'm absolutely grateful for your presence here. But even more important than that, and that's this, during this next 53 minutes, I'm here to serve you. So feel free to pick up that phone. You can pick up the phone, but it's not going to do you a whole lot of good. But what you can do is you can send me an email. Send it to Steve at TFNN.com. Inside the subject heading, please put radio show question. And of course, if you're inside our Tigers Den, well, then any and every ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Well, we got most of the indices, U.S. indices, trading to the downside. So we got Powell coming out with his statement. I believe there's a news conference as well to follow. So I don't expect markets to go one way or the other out here, just meander. So we got some meandering. You got the Dow off 2 points. The S&P's down 23. NASDAQ's off 96. Russell's down 2. Trends are up 90. Semis are off 9 points. New York Stock Exchange is up 30. Gold's up $1.70. Silver's up 76 cents. Light crude is up 60 pennies. Natural gas is flat. 30-year Treasury print out 114.09. That's up 6 ticks out there. Our leaders in the clubhouse to the upside today, led by Basil Holdings. It's a $30 move or 4%. F5 Inc. is up $30 or 11%. T-Mobile is up $19, $20. That's 9%. Brinker International, $23, 15%. ADP is up $12. It's a 5% move. We got some movers and we've got some shakers. Shaking to the downside, Manhattan Associates down $76, 25%. That stinks. Lennox International, $48, 7%. MSCI Inc., $30, 5%. Service Now, 26, a little over 2%. And Bank of Montreal is down $26 as well, nearly a 4% move there. So we got movers and we've got shakers. I'm just going to keep the e-signal charts up just for a moment. If we take a look at what's going on, what's important here on this set of charts, the very first thing is we do have this divergent pattern that is now forming inside the advanced decline oscillator. So we've seen higher highs inside the New York Stock Exchange, while we've seen lower highs in the advanced decline oscillator. You can see I have other instances where that is out here. It suggests that we prepare or get ready ourselves for some type of retracement. Do I think it's going to be significant? Well, it's not what I think. It's what the international participants think. What do you mean international participants, Stevie? Well, if we go take a look at how the Dow is trading in other currencies out there, maybe of no surprise to you, we're at a new all-time high today in terms of Dow in terms of euros, in terms of yen, in terms of the Australian dollar. We're just about there in terms of the Swedish krona. We are there with regard to the Great British Pound. We are there with regard to the Swiss franc. Chinese yuan isn't too far away from that. So our new all-time highs internationally, those folks are definitely buyers. I don't see any topping signals. I've looked at some of those charts, converted them to my white background tools out there, and so you've got international buyers that are out there. Yet we've got signals here. Well, first we've got a TD9 count set of tops for the Dow, whether it's the diamonds or what have you. So this divergent pattern here just says be careful. Watch that 50-day exponential moving average out there. What else do I need to show you on this set of charts out here? Apogee. Let's go see what do we have out here that's worthwhile. You got the ES Mini trade above its Apogee pivot point, and you've got the NQ below it. So we don't have any kind of a smooth signal there. The Dow is well above its Apogee pivot point, so it's got other levels of support on some kind of a pullback. Right now, that's at 43,821. Gold, we have to switch this. I need to switch this over to the April contract. That's going to recreate. It's going to require me to go ahead and recreate a new Apogee pivot point. There's nothing else that I can see. U.S. dollar index, we can see that its rally ran right up into that Apogee pivot point out there. I mean, like right to the T, and then it turned itself down. So I don't think there's anything else on these charts out there. I'm just going to close it and then I'll shut it down. So this just happened to land us here on the euro. I think we talked about this yesterday, that the euro has a completed TD9 count topper. It's completing that pattern today, and price should move down to tag that oscillator and change line. That'll be its first level of support. That'll be down at 1.0362. If the euro is going to move down, the U.S. dollar is going to move higher out there. On a weekly basis, it's just in a lot of trouble. It looked like last week with price closing above its oscillator and change line that maybe it had some energy out there, but that's not the signal as we speak right now. I had mentioned the Dow. Let's take a look at the Dow Cash Index. You're going to see that today is going to go ahead and complete a TD9 count top. Yes, we're not at new all-time highs in terms of U.S. dollars, but most of the other currencies out there. Now, what should take place is the Dow Cash Indices should pull back towards the 44,000 area, 44,007, whatever number you want to give it. We take a look at the XLY. The XLY is completing a TD9 count top today. Give me a moment here. We'll get those charts pulled up. It also, now this is interesting because And I'd be interested. I don't know if Basil's on the line out there, but when I was looking at this last night, I meant to send him a quick email. Because look at how quick we went in the A, B, C, D. We're in leg number D right now, leg number 4 out there. And I don't know if that's got any kind of meaning for him on his system out there, because we've seen basically very little price movement, right? But enough to create both wave number 4 and to create or complete a TD9 count top. Now, the key level here inside the XOY is going to be that oscillator and change line. At the present time, that's printing out at the 231.32 level. If price were to close below that at day's end, then I would expect or anticipate price to pull back to where it broke out from, and that'd be at the 225.15 level out there. Real estate sector, we've talked about its TD9 count top. Now, there's a number of sectors inside the S&P 500 that either have or are completing or are confirming TD9 count tops. XL real estate sector is one of them. We just looked at the XLY. Here in the case of the real estate sector, price is trading inside its profiles. So what it should do is it should move back towards its buy zone between 40.74 and 41.02. That's the real estate sector. If we take a look at the financial sector, the XLF, see what it's doing for its daily and its weekly time frame out there. Well, it's going to complete a TD9 count top. That much we know. Its first downside target is going to be that oscillator and change line at 50.55. Now, folks, these are all TD9 count tops that I'm sharing with you. What I haven't really shared with you is what is the high of the top? Because if we start trading above that tomorrow, those that have completed, those get negated and tell you about long, strong move to the upside, long momentum move, that is, the upside. So the XLF completing a TD9 count top. Now, interestingly enough, it's going into a weekly TD9 count top as well. That's from the week of November 29th. Volume out there was 122 million shares so far for the week. Wow, you're pushing into that with volume, 113 million shares. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer, the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We're taking a look at RCAT. This is for Nicholas. Nicholas is looking for an entry point. So the first thing that we notice out here when we look at these charts, Nicholas, is the daily formed a TD9 count and Rhodes Momentum Indicator top. So we know there's a top in place. What do we know since that top is formed? We know that price is trading lower. We know that price has not been able to close above that green oscillator and change line. And this morning what we've seen was a rally into it. Right now it's printed at 994. It looks like it got up to about 993 or what have you. Price is trading with inside its profile. Now, do I see any kind of a bottoming pattern? The answer there, I do not. So it looks to me you got a consolidation between 842 and 905. That's your little buy zone, and resists up at 1031. The next level of support, if price closed below 842, is going to be 716, and 716 would be its breakout area. Now there's a TD9 count. There is an A to B equals CD pattern that is formed. Let's see if it's been confirmed with volume. The swing point, the B point of the A to B equals CD, would be January 13th. The volume there was 7.2 million shares. It was passed with 13 million shares. So now you know that you've got an A to B equals CD, a confirmed A to B equals CD pattern. Does not mean that it will actually go ahead and complete, but you've got a confirmation of it, and price has not been able to take out any kind of resistance, so we're just seeing support levels fall. And this tells us about getting down into a level around the $5 area. We look at the weekly time frame chart. It also has a TD9 count and Rhodes Momentum Indicator top. Now, price has been unable to, on the last 3 weeks rallies, been able to get above its green oscillator and change line. So it's definitely lost its momentum. Now, it has a buy zone between 662 and 762. No bottom signal or anything there. The only way that would come into play, and we see a bottom on the daily time frame, I would say, would be price gets back, tests and rejects the 716 area, and it does it with less than 4.1 million shares. And I'm looking at the swing point, Nicholas, from December the 12th out there. Because if you could get a test, meaning a high, either a test of a lower high, 671 or 744, close back above 744, do it on less than 4 million shares, then you'd have a rejection of a swing point on lighter volume. That, in fact, can be a bottom signal. So you're looking for an entry point. You've got to continue to watch the stock behavior, because we most certainly don't have that. Hopefully that explanation and that visual look at the charts makes all the sense in the world to you. As always, thanks so much for your request. Hector and Patty want to take a look at SCCO. So... oh, wait a minute. There was nope. Okay, yeah. So actually, I'm coming back to SCCO. What I'm doing first here is as Robert had written in, and he was asking about XBI, and he specifically was asking about the 130-minute time frame chart. So let's open this up. And his question was, is this a top? So I'm assuming you meant for the 30-minute time frame chart out here. Well, we see. So how do we answer that question? First thing is, when I take a look at this pattern. First thing I'm looking for, is there an A to B equals CD pattern out there? Now, there's a possibility that there is. I don't know what this retracement is. When I say the retracement, here would be the A. Here's the only A to B equals CD pattern that I visually see that would be out there. And that's going from the low of the trading session of what? Let me get my cursor. Looks like January 14th or so, January 15th. The low of January, this is at 4 o'clock in the afternoon. The low from January 14th to a high that comes in on a 130-minute basis when the market opens back up the next day. And then we get this retracement down here into 1140. And that looks to me like that's more than a 0.786 retracement. No doubt this would be more than a 1-to-1. This would be a 1-to-2 or beyond that. So, if there is a, sorry about that. And I don't really see this as an A to B equals CD pattern out there, Robert. So I'm going to go that's not the topping signal. And do I have a top? Well, we had a TD9 count top that got negated. So that's going to add to the idea that, no, there's not a top out there. Well, what about a test of a swing point on lighter volume? All right, excellent question. Let's check that out. So what we're looking at here is we're looking at the swing point from 11:40 in the morning on January 7th, 4.1 million shares. That was tested here at 11:40, yes, 2 mornings ago with 4.4 million shares. So that was tested with volume out there. And we've been trading inside that swing point. So right now what we see here is there's a Rhodes momentum indicator signal that's been triggered. That requires a bearish reversal candle, Robert, for 130 minutes in order to confirm a Rhodes momentum indicator top. Then the next thing that would take place is price must close below, at least start trading below, that green oscillator and change line, 92.69. If it doesn't do that, the signal's neutral. If it does do that, price lost momentum, and it should pull back to another level of support. Another level would be 91.39 or 90.29. So that's a 130-minute time frame chart. I don't have any kind of a top that I see, just a consolidation, if you will, with inside its profile. But quite frankly, it can't even push down below the bottom of that green oscillator and change line. If I look at the other charts here for the XBI, just to see if there's anything else out here to observe. Wave number 7 is what I see on the 65-minute time frame chart. And price has been trading with inside the candle that formed that wave number 7 ever since. That was at 10:35 in the morning on January 27th out there. I see a 195-minute TD9 count top. So this would be the one. So if you were to ask me, Steve-O, did the 195-minute chart form a top? The answer there, I would say, is yes. And with price consolidating with inside its profile. Key level of support, 92.18, 91.90, and 90.37. We're trading above those levels. When I take a look at the daily time frame, I do not see a top at all here. It looks like with price trading above profile resistance, trading above its oscillator and change line, looks like it wants higher price out there. I think we had talked about this. The issue that it is contending with, like many weekly charts out here, are there oscillator and change lines. In order for XBI to really get its mojo going to the upside out there, it needs to close above that 94.51 level. If you can do that, then you're off towards the 98.60 area, the daily TD9 count breakdown level. So I don't have a top on the 130, but we do have the top on the 195, and I hope that that helps you out. Hector and Patty wanted to take a look at Southern Copper, and Hector was mostly interested in the weekly time frame chart, and he's mostly interested in looking to see if this thing has formed a bottom. So let's open up the weekly time frame chart. Let's go through this and see what it is that we know. What we do know out here is that there is a sell the D point top. I can easily see the A to B equals CD pattern that formed out here, and that was confirmed on May 24th. Now, there's not an A to B equals CD pattern to the downside. Instead, what we have is Southern Copper continues to test the swing point on a weekly basis, that is, from August the 9th. There's 5.6 million shares. The low of that is 90.85. The first time we tested that was with 2.7 million shares. We got down to 90.76, closed at 92.01. That was most certainly a test and rejection on lighter volume. What did price do if you can't bust them down? It tried to bust them to the upside. And the bust them to the upside did what? It ran into that weekly oscillator and change line. That is a little bugger out there for many instruments. So it gave you that bottoming signal, and then, of course, it gave you that resistance a signal as well. So now we are testing this week. We're testing that same swing point. Again, the swing point from August 9th, 5.6 million shares when that swing point formed. We are at 3.4, and we are halfway through the week. Price is moving into that swing point with volume. It says even if we close above 90.85, then what's happening is we should retest that. What happens if it takes that level out? We come back to this break. Let's draw in that A to B equals CD pattern to the downside. Steve Rhodes with TFNN. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This year has already been a wild ride for the market. We started off heavily in the red, and now it seems like we may be traversing back to all-time highs. In short, this market has been a whiplash and requires constant pivoting. Where does the market go next? Should I add to this position or cut my losses? Where is the next opportunity? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 4 hours of live trading. Larry's been through many markets just like this one, and his insights are invaluable. The next event is this Friday, January 24th from 9 a.m. to 12 p.m. Eastern. If you subscribe today, you'll also be able to attend his session February 8th. Get in here and let's start trading. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We're looking at the daily, weekly, monthly charts for Southern Copper out there, SCCO. This for Hector and Patty. And if we do get a close below the swing point from the trading day of August the 9th out there, that low is 90.85. You'll get a confirmed weekly A to B equals CD pattern to the downside. Price objective right around the $82 level out there. We've got a daily A to B equals CD pattern to the downside. That's already been confirmed. That's got a price objective in the 84-ish area out there. We don't have any kind of prices trading back inside its profile in the monthly time frame. So everything here in Southern Copper is pointing to the downside at this moment in time, Hector and Patty. And I would be watching that swing low from August the 9th. Even if it doesn't close below it this week, it should get back down there to at least test it once again. So hope that helps you out. Always good to hear from you too, and thanks for that request. Next one is from Tom G, and Tom would be like to take a look at NVIDIA. And from either side, he doesn't care which way he would trade it. Well, if we take a look at NVIDIA, what we know, we take a look at the daily time frame out here, is that this has a consolidation breakdown. And if we take a look at where NVIDIA is likely headed to, it should fulfill that consolidation. That would get us back towards the 103.43 level. That is a daily TD9 count breakdown area. There's no bottoming pattern that I should take that back. I should definitely take that back. I'm going to just do this here because actually NVIDIA confirmed a Gartley buy pattern yesterday. It most certainly did. Let's draw that in there. Okay, glad I took another look at that. So there's your A to B point. I'll just simply move this over to the C point. This is more than a one-to-one extension out there. And you can see yesterday was that bull sash candle out there. So what's that tell us? Well, first of all, that tells you you've got key support. So if price is going to pull back and complete that, so you've got really two patterns out here. You've got the consolidation breakdown that suggests moving back to 103.43. The only way that's going to happen, or the way that you know that's happened, is a close below yesterday's low, because that's now support 116.25. What should unfold out here is price should rally up towards its oscillator and change line. That's at the 134 level out there. That's a daily time frame. Let's close this back up. Come on, work with me here. There we go. And the weekly time frame is sitting at a potential level of support just above its breakout level, which is at 114.86 on a weekly time frame, and at the center of its profile. And the monthly is sitting at support. Friday is going to be the key level out there. We haven't seen it close below its oscillator and change line, NVIDIA that is, since last time we were below it was back in December of 2022 out there. December of 2022. You got to love that. Over 2 years out here. The key level that you're watching for on Friday is going to be 123.87 at this moment in time. So, Tom, you've got a Gartley buy on the daily. It should be able to make its way up towards the 134.07-ish area out there. 134, let's call it 134 to 135.76, the latter being the bottom of that daily profile. So hope that helps you out. And as always, thanks for your request. You also want to look at light sweet crude because you're interested in drip. So if we take a look at light sweet crude, we've got the March contract up on our screen out here. We can see that on a daily basis, price is trading below profile support as well as its oscillator and change line. So we know it's lost support. When it loses support on a daily time frame, I like to look at the weekly time frame, see if there's anything that sticks out as a support level. And sure enough, there is. What is it? It happens to be the oscillator and change line. Why is that support? That is support because it's inside of its weekly profile. The top of the profile, 74.92. We closed inside it 2 weeks ago. I had followed through the downside last week without a bottom signal on the daily time frame for light sweet crude. Looks like it wants to go target 71.94. Now, maybe that sounds like bad news. Actually, that would be great news if it could do that over the course of the next couple of days. Today is bar number 7 of a TD9 count. If it can do that, you might be able to get a TD9 count bottom pattern that were to form between tomorrow, Thursday, and next Monday. out there. So no bottom yet. This looks like it's going to be at least a 2-week move to the downside. Most of the moves to the downside most recently have been 2-week moves. So you'd love to see a spike low in light sweet crude, create a TD9 count on the daily time frame, hold 71.94, and then you'd have a reason, at least from a trading standpoint, because we know that we looked at it. I can't put those charts up now, but we did take a look at the directional correlation between light sweet crude and drip. I believe we did get that in, and we know that that's a very direct a directional correlation out there. So no bottom as we speak just yet. Tom, be patient, but you might see something over the course of the next couple of days out there. We had someone wrote in. They said they wanted the GDX and gold, and I forgot to write down who that was. But let's take a look at Goldilocks first out here. This is now the April contract. We've rolled over the April contract. So let's open up the daily time frame chart. There's a new set of profiles out here for you. New sheriff in town, and those profiles have got support at 27.45.90. That's your support area. Your sell zone for the daily gold contract is between 27.89.40 and 28.11.20 out there. If price can get above 28.11, close above 28.11, you ought to make a move up to the 28.45 area. That would be its TD9 count breakdown level. If we look at the daily time frame charts, ever since the bottom that formed back here, December 19th, all pullbacks have been for 1 or 2 sessions maximum. So also keep an eye on that to see if gold continues to keep its trend. I'm referring to the bottom portion of the screen, folks, not the top portion. The 2 bars you see at the top portion are measuring TD9 counts. The bars at the bottom are measuring consecutive moves higher and lower. That was a daily time frame. Now, because we don't have a lot of data, because we're just rolling over into the April contract, here's what I can share with you that we do know. You've got a TD9 count top that's in place. And what does that mean? That means in order for gold to truly get its mojo from a weekly standpoint, you need to see a close above 28.46.60. If we do that, you're off to the upside. Otherwise, price is trading within, so I've got a TD9 count top. It's had a nice rally. It's trading into a sell zone. That's why we've got a lot of chop out here. The sell zone here on a weekly basis is 27.76.80 and 28.23.30 out there. On the monthly time frame chart, I would really have to put the continuous contract up to get any kind of get information out there. So not really providing you and I with much information. Let's take a look at the GDX. Did I get that? I don't think well, let me just check. I can't believe that I was that intelligent. Yeah, I wasn't. In any event, I'm laughing at myself. You'd laugh too. All right, so let's put up the charts here for the GDX. Let's get the answer on that, what they're doing. They're probably also somewhat of a consolidation-ish, so to speak. Well, no, they're trading above profile. So if we take a look at the GDX actually has probably a couple different A to B equals CD patterns that we could draw in here. So I'm not going to really do that on the daily time frame. What we don't have is a top. What we do have, though, is a wave number 6 that started. So you could get a wave number 7 top over the course of the next several days out there. It looks to me, because gold, the GDX, I should say, is traded above its green oscillator and change on the weekly chart. What it should do, whoever was asking, it should rally up to 38.60. That's the profile resistance level for its weekly time frame. Steve Rhodes with TFNN. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. Just checking in on the ES Mini right now. The 30-minute time frame is going to go ahead and complete a TD9 count bottom pattern at 12 noon out there. We are in the bar following bar number 9 out there. You want to watch that low, whatever that low is, because if that low doesn't hold, that would suggest that the ES Mini would go target 60.3875. The reason I say that is on the 2-hour time frame last evening, we got a nice at 2 o'clock in the morning. Well, really about 4 o'clock in the morning. We got a nice little TD9 count top there, and price is trading below profile support. It's trading below its oscillator and change line. So the question is, does the 30-minute TD9 count bottom hold? Unfortunately, I would be more inclined to say yes if the NQs also had that same pattern, and they don't. Why don't I just put up the NQs right here? It'll take just a moment to populate. I had checked on another screen some other charts that I had, but it'll take me just as long to try to do that. To move over there. So you'll see that we're not in bar number, I think bar number 7 right now is low on the 30-minute base. So it's going to need a spike below, just waiting for it to populate, but it's going to need a spike below. Yeah, it was bar number 7. So it needs a spike below between now and 12:30 out there. And if it does that, then you get a TD9 count on its 30-minute time frame. The low that it needs to spike below is 21,456. It's also the 2-hour NQ chart that formed a TD9 count top early this morning. Did it at completed that pattern at 6, just like the ES Mini. And price is trading below its oscillator and change line, as well as profile support. So if the TD9, well, first there's no bottom. I don't have any bottom signal. I guess there's one on the 15-minute time frame chart. It's a Rhodes Momentum Indicator bottom. But if we don't see a bottom here, price is likely going to go gravitate towards the 21,281 area out there. So I just wanted to pass that on to you before we go and take a look at our next request out here. This is for Dan inside the Tigers Den. Dan would like to take a look at SLXN, which I believe that you're in, and you're having a heck of a party out here. I know you lived yesterday, as I recall. You were looking for potentially this forming an island an island bottom. It didn't do that, but it didn't necessarily need to do that. It went ahead and gapped to the upside. Today you are trading above the top of its profile as well as the TD9 count breakdown resistance. So, Dano, I think you got something here with regard to SLXN, trading right now at 254. So as long if this closes today, perfect. If this closes today above 221. And close above it again tomorrow, you definitely have a change in trend inside of XLSXN. If you look at the weekly time frame out here, it's got a Rhodes Momentum Indicator bottom signal. You certainly have a bullish engulfing candle, a three-river morning star candle at present at the moment. Of course, it's not Friday, but that's looking good. Now, I don't have enough data here to give you anything else other than, and I know you'll love this, that what the weekly chart says. It says its price target is $12.60 out there. I'm certain, relatively certain, there's new profiles that are going to form between now and then out there that you'll have to contend with, as well as some other patterns. But SLXN is looking mighty fine. It turns out you didn't need that island bottom pattern anyways yesterday. And so hopefully this closed the day above 221. And thanks as always for your request. Phil, hello, Phil. Nice to hear from you. Phil inside the Tiger's Den wants to take a look at JetBlue, and his question is, how low can JetBlue go? Well, let's go find out. Well, the first thing that it did yesterday, gap to the downside, was a test of breakout support. And that level held. So you know right now that's an important level. By the way, we're trading below it right now, but it doesn't matter what we're doing at 11:46. It matters what we do at 4 p.m. So how low can it go? Well, first you've got this 595 level. Came down with massive volume, I would imagine, with a big wide range of bar like that. Let me open up this daily time frame chart. It was testing a swing point, testing and rejecting a swing point, as a matter of fact, October the 31st. Now, 18 million shares were traded then, yesterday, 124 million shares. I would say it came down with a little bit of volume. But here's your swing point, Phil, that is held even though, so this is an important swing point. I would say now knowing that, 595 was a good level of support, its breakout area, but you traded into this swing point out here, and you'd really want to see a test and rejection of that swing point to say, okay, maybe the bottom is in. Getting back to breakout support can be a bottom. So you would need to see a close above 591 and on less than 18 million shares. And if it can do that, then you get that test and rejection out there. Where's the next lower price out here? So that's a good question. Let me just go change the number of bars that I'm showing, the lines out there, so this can go ahead and pick that up for me. It'll take just one moment to do this. So instead of one line, we want two lines out there. And then the next area that shows up is, well, it's 571. So here, I guess I should have been able to figure that out myself. In any event, so you've got another level of support at 571. You're saying how low can it go? I think Stevie ought to put up a third level out there. So let's do this. Easier for me to just do this instead of possibly give you a wrong piece of information, which I don't want to do, certainly intentionally. And so now where would be the third level on the daily time frame? 468. So the answers to your question, Phil, 595, 571, 553 and 468. Those are the levels to be watching out there. But one at a time. Right now, we're keeping our eye on 595 and that swing point on a daily basis from October the 31st. Now, that was the daily time frame. I know I spent a little bit of time there. Let's see what we see, if anything, on the daily. On the weekly. The weekly has support at 565 or 507. 507 was the breakout level, 565 profile support. The monthly time frame chart, this has been a consolidation with inside its profile ever since November of 2023. And the range there is between 402 at support and resistance up at the 764 level out there. So the daily basis, you've got those key areas of support. If they start cracking, you know what other levels to be watching. And also you can be paying attention to that 565 figure, 507 level coming off the weekly, 495, 463 on the monthly time frame chart. So that's what we see. We take a look at JetBlue. I hope that helped you out and didn't confuse you. If it does, let me know, and I'll try to confuse you even further. We're taking a look at Otis Elevator out there. This morning there was John in Milwaukee purchased a few shares, added to his position. He did it at 90.37. His question is, where is the stop out there? The answer to that is you've got to put up the 10-day average true range. How can Stevie do this? I can do it pretty quickly, I think. Let's get my market analyzer. Let's pull that up on the screen. Let's put this over here. Let's put an OTIS. So this is just one of the scanners that I go through during the evening time to pick out TD9 counts. Oh, this has got a TD9 count top out there. I'm looking for the average true range out here. The 10-day average true range is $1.78. So your stop should be $1.78, in my opinion. Your stop should be $1.78 times 1.618. And that would be the stop size. Now, the thing is that you would typically use that to also determine how many shares that you would get. But you want to have your stop that's outside the average true range out there, because that would just be normal movement. So that's how I would assess that. You're in, say you're in at 90.37. Maybe you bought some yesterday, not today. Because then it didn't get down to 90.37 today. But I'll finish looking at Otis so we come back to this break, see if there's any other requests. Oh, there's one more that we've got. That is ALAB for Duncan Steve. Sounds like that's how we'll close out the show. Be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. Just to finish off Otis out here. So this morning it gaps down. It trades all the way down to its breakout level at 92.06 out there. Because you're a longer-term trader out here, where I would have my stop. So I gave you the average true range, the 1.618. You do the math on that. But I would have my stop below the low of this TD9 count Rhodes Momentum Indicator daily hammer candle out there. And that low is at 90.37. And how I would do that is if price closed below 90.37, not traded below it, but if price closed below it, then I would go ahead and exit from this position here. This is the trading position that you've added. So I hope that helps you out. Let's go take a look at ticker symbol ALAB for Duncan Steve inside the Tiger's Den. ALAB fell out of bed a couple of days ago. It's getting a large A to B equals CD pattern to the downside. It's probably at the 1 to 2 level right now. You're looking for a bullish reversal candle to confirm a bottom. Otherwise, this thing likely wants to head even lower. We don't have any kind of a daily signal of a bottom. Yesterday was just a one-day rally out there. Can it get 2 days? It can't get 2 days, a pretty weak. Price is trading below profile support on a weekly time frame. Its next level of support would be down at 36.85 out there. I'm not saying that's where it's going to go. We can see that we also have this gap that was open. So price had gapped up back on the trading day of November 5th, and it does it with 24 million shares. Comes down and with 16 million shares. So it's at least coming into that gap with lighter volume. But the gap still needs to be closed. That means it needs to get down, some type of spike down to at least 75.16 to go ahead and fill that gap out there. It's more likely what it wants to do, but it's kind of like a nowhere zone right now. It's I don't see it. I don't see any real clear support out there. Lastly, I'll leave you with the Dow Equity Future Contract. That's the one for us to keep an eye on. And the reason is because that's one that's got that daily TD9 count top that's going to go ahead and complete today. Right now, intraday, not a whole lot in the way of signals or what have you, but that could easily change come 2 p.m. So have a wonderful Wednesday, folks. I'll look forward to seeing you tomorrow on Terrific Thursday. Take care. Be safe out there.